what am I going to do here? Because we're running out of capital. We literally got nothing left in the bank, but I got these HMOs and I sold some and I made money from them. This is what got me into trading. We thrive off negative times. When things are good, it's harder for us to buy. That's what people don't understand. When things are very negative, when people are being very cautious, Brexit, the whole Liz Truss situation, just after COVID, that was a great time. Everything's for sale at the right price. The people that don't understand trading is because they have that scarcity mindset and they don't have the big pipeline. But if you start building up your pipeline, you've got loads coming in, you're like, it's fine, I need to sell these because I've got more that I want to buy. So it's all about risk reward. Everything's about risk, and people don't really understand that. It's like, if I buy that at 50% of its value, that's selling at 60 to 70% of its value at auction. It doesn't matter what's going on inside. And you might have 1 in 20 that's really, really bad. It will still sell and break even. If you've got appetite for risk and you know how to underwrite risk and you can kind of have this volume, then you're going to be okay. If you've just got one deal, you're going to be so precious about it. I want to maximize it. I want to develop it out. I want to do this. We're never ever precious about a deal. It's just another number for us. Not focused on making maximum profit. I'm focused on I want to be in, I want to be out. Most property investors go to an estate agents or auction, they say, oh, we're looking for rundown houses, want to add value. And it's like, yeah, but what you really need to be saying is,
before we get into this episode, I just wanted to thank all of the people that have recently subscribed to our channel. We've had a lot of growth and comments and feedback recently, and they've all been super positive. All those comments, all those shares, all those likes, all those subscribes really help the channel grow. Please do check out our sponsors, and we look forward to growing with you. Hello everybody, and welcome to another episode of Property People. Today I am delighted to be joined by Mr. Saif Derzi. How are you today, Saif?
good, all good. Thank you for having me.
Very good. Very, very excited about getting into some of the detail about what you do, because it is, as much as I've been in property for 20 years, what you do is somewhat foreign to me and somewhat risky, I think. And the people that do what you do, I think have got a very, very sharp skill set. So it'd be good to dive into all of that. Very quickly, though, you're an award-winning property trader, bought and sold over 240 properties in the last 5 years. You've run a property cash buying company day to day, where you are one of the only companies nationwide to offer genuine cash offers for purchases of properties within 2 to 4 weeks.
Correct, yeah.
Which is, for everybody thinking that, property takes 3 months to transact in the UK, to be able to do that and volume is an impressive feat. So we're going to dive into all of that. But
Definitely.
Before we do, where we always like to start is, who were you at school? Did you always know you'd be a property trader?
No, to be honest with you, like when I was at school, I never thought I'd get into property. I mean, I always wanted to do something to make money. That was kind of always the thought process. So, if we went on holiday, did this, that, and the other, I'd always try and buy something and bring something back, for example, to sell it. So I was always kind of one of those people that I was always going to be a trader, but never necessarily thought I was going to be a property trader. So it was always about how do you buy something and then sell it for more money. And I like to use the word arbitrage, because arbitrage is about being able to buy a 6-pack can of Coke, for example, and then sell them individually, and basically a multi-pack, and then obviously sell them individually and make money. And that for me was always kind of, as I was kind of young and growing up, that kind of mindset of buying something and selling it and making money on it. That was key.
And at school, were you kind of like straight A student, or were you a rebel, or in betweener?
I was kind of one of these people that left everything last minute, but then I got really, really good grades, because obviously I kind of just, rolled my sleeves up last 20% and did it all. So 80% of the time I did absolutely nothing, and then 20% of the time I just went full throttle. But, even at uni, for example, I did pharmacy, so it was a 4-year degree with a master's. First 2 years didn't count, last 2 years did. Because I knew that, I did nothing for the first 2 years. Wow. Last 2 years really, really rolled my sleeves up and ended up coming out with a first on it, But if you knew me at the time at uni, you would have been like, that was impossible. You're never even going to pass uni, let alone get a first. So, I'm one of these people that I need pressure to basically really, really kind of come to life.
That's, since you say that, I'm always envious of those people. I do know those people at school as well that were really they were into skateboarding and everything else. They were out all the time, but then suddenly,
used to skateboard.
Yeah, there you go. Probably something in that, but very envious, because no matter how hard I tried or didn't try at all, I'd always get the same grades anyway, which were very bang middle of the road. So to do pharmacy though as well, so that's quite an interesting line of work, or a field of study. So why did you study that, and why didn't you continue doing that?
No clue why I studied it. Like genuinely no clue. I just, you're 17 years old, you're doing your UCAS application, I just put something in, and I just thought pharmacy. So genuinely have no clue why I did it.
Wow.
Why did I stop doing it? I kind of, when I graduated, I was one of these people that was kind of keen. So money was a real driver for me at that point, and I wanted to kind of really kind of go up the ranks super, super quick. So I went kind of from pharmacist to pharmacy manager, and that's kind of how you start to get more income. And then I kind of almost capped the amount of income I was making, basically. And I was making what people would make, after 10 years from graduating, for example. And when I did that, I knew that there was nothing else that I can do. It doesn't matter how hard I worked, I was capped. And as soon as, there was a ceiling. And as soon as I knew that there was a ceiling, it got me bored because I then again, I lost motivation, and I was kind of just in that, just really every day today. It's almost like button pushing. You're just doing the same thing every single day. And I just decided, you know what? All my friends at the time were just complaining about it. Oh, this is boring, etc. And I thought, okay, you can complain about it or you can do something about it. And that's when I decided I'm going to do something about it, set up a business outside of property. So it was a healthcare business. We were trading healthcare products, and then kind of from that went into property.
So on the pharmacy thing, you went into healthcare products, which is kind of something similar.
Yeah, like vitamins, supplements, a bit of pharmaceuticals as well. But we're effectively trading them. Again, it's like anything really. We were kind of getting them from manufacturers in the UK. We're going to the Middle East, Asia, Europe, and basically selling them for a premium, because ultimately they love UK, manufactured products. And we were getting them at pretty good rates because we were in with the manufacturers direct at source. So we're not going through wholesalers and middlemen. And that's what we're doing. We grew that business, and it was a virtual business. So I had no office. I used basically the staff from the actual manufacturers we were using. So they were doing everything. And we came and we had a contract with them. So it was almost like drop shipping in a way.
I was about to say,
very, very similar. So we were getting orders in from distributors. We were passing it on to them. They were basically fulfilling everything. And then we would invoice them a commission for every single order they fulfilled.
And that, I mean, in the vitamin business and stuff, like there's the Dragon Tej Lavani or something that makes it quick. That's big money. Did you not think, right, how can I kind of double down? Or was it suddenly that everybody's doing this and it's a very crowded space?
Yeah, I mean, he owns Vitabiotics. Well, it's actually his dad's business, and he kind of is second generation. Actually, I think he's third generation to that business. Vitabiotics is kind of like a very, very well-established brand, one of the leading brands in the market for vitamins and supplements. And because you've established a brand that's it's like having a Coca-Cola or a Heinz, for example. These are well-known home brands at the minute. So that kind of brand allows them to be able to basically charge more money and ultimately drive marketing. Marketing's a big thing for them. So they might be their hair, nails and skin might cost them 50 pence or 70 pence, but they might be selling it for $4.99 or $10.99, whatever it is, and they've got a big markup on it. But for me, I wasn't in the manufacturing game, I was in the distribution game. So I was kind of the middleman, and they had a very, very well-connected distribution network all over the world. And they're the type of people that wanted exclusive distributors, and they wanted to deal direct. They didn't want this agency-style model, which I was basically an agent at the time. I was a facilitator, so it didn't really appeal to me. So I went to the kind of smaller, more established brands, but at the same time, they were kind of at the lower end of the market. So they were all about volume. They call them penny businesses. So they make pennies on every single product, but they have to drive volume. So that's what I did. And I didn't really want to go into building my own brand. Like, having your own brand is tough work. What's even better than having your own brand is being the company that produces everyone else's brand, right? And you almost are this white label company and machine, because then you don't have to spend money on marketing, worry about all this stock and everything else. All you're doing is all the big brands are doing all of that for you, and they're coming to you saying, can you manufacture this? Lower margins, but huge volume.
And a lot of that manufacturing is out of the UK anyway, is it?
No, it's the UK. They still manufacture in the UK. Yeah, I mean, look, a large part of it now is probably outside of the UK, and they bring it in bulk and package it here and stuff like that. But ultimately, they still do manufacture here.
You know so much about this. You studied it at such a high level. So what was the transition to how, let me
into
do
property.
Some property,
So take you back to 2015. Funny enough, 2015 was when people were still talking about recessions at that point. And we're now 9 years in. So 2015, accumulated a bit of money, just decided to do something really vanilla. So bought a two-bed flat in Manchester. It was in Salford at the time. I was actually doing my kind of like year, they call it a pre-registration year. So before you become a registered pharmacist, you have to do a year of work. So I was in Manchester, did that. While I was there, I was kind of looking at all these skyscrapers happening all around Salford and Salford Quays, huge new build blocks. And I thought, but what about these ones that have been built in 2007 that are now secondhand, they're unloved, Went to buy one at 110,000 from the open market. It was just with an estate agent. It's £110,000, 2-bed flat. And then basically someone beat me to it, and they ended up accepting their offer. Thought, okay, it wasn't meant to be. Same agent called me back saying, actually, I've got a same flat in the same block. Different flat in the same block. It's a lady that's basically migrating back to China. She just wants to sell it. And actually, it was £95,000 at the time. Sorry, it was £90,000 at the time. It's about £20,000 cheaper because it didn't go to the market. And we did a deal on it. And that's kind of 2015. I refinanced that flat in 2018 at £150,000. Rents went up. It was just, did nothing to that flat whatsoever. I didn't even do any renovation work. It was just buy it. But ultimately, that Manchester Salford, all the new builds kind of carried all this old stock with it.
There's so much money being pumped in as well 100%. To regenerate that whole area.
Yeah, so that was the power of property for me.
And then you were like, this is quite fun. If I scale this could make a better
Yeah, so
money.
I thought, you know what, I want to scale a property portfolio. So my next property after that, funnily enough, I was looking at a these student pods basically, which are basically not mortgageable, etc. So I was looking at student pods in my area, and I went to the estate agent. I was asking about it, and she said, "Well, why do you want to look at that?" They just had a portfolio of HMOs that got repossessed at the time, student HMOs. Their director of the branch had bought them, and he was selling them through the branch. So she said, "Look, it's one of our directors basically selling these, but they're still good value, etc. And they're way better value than this unmortgageable new build." And I bought a 4-bed student HMO. I paid 150 for it at the time, and it was just great, And that's kind of what started. So I thought, you know what, I'm going to build up a portfolio of HMOs, and that's kind of how it started. Really getting into property at that point.
Interesting. So my wise old man always says, "Never sell, never sell." He loves property and he always has done, and he's always saying, "Never sell unless you buy something else." So it's like, okay, but with where you're at now and what you're doing now, which is the property trading side of things, I mean, it sounds incredibly exhilarating because you're just on this kind of like roller coaster where you're just kind of on the go constantly. So how did the mindset shift from, hey, let's grow a property portfolio, and whereabouts are you based?
I'm based in the East Midlands, so born and bred in London, Hammersmith, kind of moved around between Brighton, Manchester, now I'm based in the East Midlands. But to take you kind of back to that point, so I then decided to grow a HMO portfolio. I was then working in an Article 4 area, so it was getting really hard to buy, bought a few there, and an agent just said, "Look, you're calling me up every day, I don't have any stock because it's Article 4. Go to a non-Article 4 area, that's where you're going to find the value that you're looking for," because I was looking for good value. Start to go to non-Article 4 areas, build up a HMO portfolio of, I think it was probably about 13, 14. Realised it was very capital intensive, loads of voids, loads of maintenance, loads of tenants basically in and out. And then I decided, okay, what am I going to do here? Because we're running out of capital. We literally got nothing left in the bank. We're running out of capital, but I've got these HMOs and they're not really delivering what they should be delivering, and they're just taking a lot of time. So I decided to sell them, and I sold some, and I made money from them. And I was like, okay, this is what got me into trading. And then I sold a few more and made money. And then it was like, okay, all of a sudden money's back in the bank. Things are flowing. So if I can start to build up my pipeline, I can start to buy and sell rather than kind of just figuring out, the holding side of things. So we kind of went through the cycle of buying 3 properties, keeping 1, and selling 2. And that's what we did. We built up a portfolio of about 100 properties in there. Really got rid of a lot of the HMOs, or basically convert them to social and supported. This was back in 2019. So before this whole supported craze came about. And we had a few blocks in there. And then I basically said, look, we've got to a portfolio size that's big enough. Rental income doesn't pay your day-to-day bills. That's the reality. Unless you're sat on a huge rental income, if you're leveraged and you're setting up a portfolio in the last kind of 5 to 6 years, it's difficult. So I thought, you know what, this is my pension pot, or this is our pension pot, because obviously I have partners in it, and I'm not going to focus on that for our day-to-day income. What I am going to focus on is the actual kind of trading aspect of things, because that is tangible. That is money in every single time, and you can use that money. So I then set about to basically start trading, worked with some of the auction houses, cash buying businesses, and they were feeding us stock, which was great. We were buying, we were selling, we were making money, until the Boris bounce back happened in early 2020, and we basically, all of our contacts that were feeding us stock stopped. And then I thought, okay, well, I can't just depend on other contacts feeding us this stock, because when you're trading, it's all about, like, you have to have a big pipeline.
Yeah.
The people that don't understand trading is because they have that scarcity mindset and they don't have the big pipeline. But if you start building up your pipeline, you've got loads coming in, you're like, it's fine, I need to sell these because I've got more that I want to buy. And you've got that whole pipeline. So
Right.
that was when I set up my cash buying business, and I thought, I want to take control here. I want to have my own cash buying business, and we did. And that's kind of where we really start to get more and more into trading.
So it's incredibly interesting, to be honest. And I kind of like about 5-6 questions popped in my head all at the same time. So with the trading side of things, the big pipeline, you were getting the leads initially from other cash buying
sources,
companies,
cash buying companies, auctions,
auctions house.
Yeah, anywhere we can get, anywhere there's motivation. So we were teaching everyone and kind of training everyone that we're not looking just for certain rundown houses. What we're actually looking for is motivation, right? So it can be any property, anywhere. But if there's a motivation, that's probably going to be a deal for us. If it's a rundown house, but they're not motivated to sell it, it's not going to work for us. So every time most property investors go to an estate agent or auction, they say, oh, we're looking for rundown houses, want to add value. And it's like, yeah, but what you really need to be saying is, I'm looking for motivated sellers that need to sell really quickly and want certainty and they want speed.
Right.
Because you can either have certainty of speed or you can have price. You can't have all three, right?
Yeah.
And for us, it's like, look, you're not going to get the best possible price, but if you want certainty of speed, that's what we can offer you.
Very interesting. I like that trifecta thing as well.
Yeah.
So now that you've got the cash to do the first trades, because you mentioned as well investors.
Yeah.
Like how did those conversations come in? Is it friends and family to start off with? Is it institutional people that you're working with?
No. So we obviously, from my own kind of healthcare business, we generated cash from that, to be honest with you. So we kind of self-funded a lot of what we did in the early days. In terms of the portfolio, I have a joint venture partner. He brought the cash to the table, and we basically utilized a lot of that cash to build that portfolio out. Plus, we've got our own kind of portfolio that we built up over time. But in terms of the trading side of things, it's very much a case of that was bootstrapped basically from day one. And the more we traded, the more capital we made. Our cash pot got bigger and bigger and bigger, because that's what trading's all about. So that's kind of how we did it. Now we do get, we do have people that will come to us and say, can we loan you this and you give us a return? Or some people that will come to us and say, can we joint venture? We'll offer you, whatever, 500 grand, £1 million, and we want a percentage of the profit share. And we will do that stuff, but that's not how we started out in the early days. But as we're starting to scale now, there is points where we do need the capital because we've got loads of deals coming in. But also at the same time, we went through phases where we didn't need the capital because we didn't have as much deal flow, and actually we had loads of our own capital that was backing up, and we're like, we really need to start feeding more deals into the pipeline at this point.
With deal flow, whether they come from estate agents or auction houses or any other form, is it that when there's a recession, you will find, we've just gone through one in December, it was kind of noted. Do you find that that's the time when you're going to get more of these distressed sellers?
Yeah, so as a trader, we thrive off negative times. Yeah. So when things are good, it's harder for us to buy. That's what people don't understand. Yeah. So look, there's always a trade-off, because ultimately, if you're in a position where you can buy well, it means that selling is probably not going to be as easy. But also, if you're in a position where you can't buy as well, selling is very easy. So you always got this balance basically. But as a trader, I think when things are very negative, when people are being very cautious, like we've seen just after COVID, that was a great time. Like we saw just after the whole Liz Truss situation, that was a great time. Brexit, that was a great time. All of these little things that happened that created that uncertainty where people are like, just going to sit and see what happens. That's when traders come to life and they start buying stuff.
It's so counterintuitive, and I laugh because it's kind of like when you say these things, a lot of people get like shocked and they almost say it with a downturn. It's like, oh my God, that was such a painful moment. And you say it with such an upbeat kind of, that's a great time.
Because I wasn't a developer and I wasn't an investor at that point. So for me, I was looking at things more from a point of view of, look, motivation levels were high, people were uncertain, and that meant we got more leads, and that meant people sold to us easier. Now, we're in a position now, we're in 2024, the market's hard again to buy. The motivation levels have dropped down. Contrary to all of this, we went through a recession last year and everything else. People have got money. People are not motivated now like they were before.
And so equally, you feel the pain whilst everyone else is champagne and rainbows. You're kind of like, well, it was a hard year for us.
Yeah, because ultimately what you've got is you've got a pipeline, right? So it's probably easy for us to sell our pipeline that we've been buying from November, December, etc. that we've got, in our stock levels. But then to replace that pipeline is hard.
Yes, indeed. And it sounds to me like that origination piece is very important. And there was one guy that I met him, he did a presentation. I think he was nominated for an award or something. This was probably about 8 years ago. And I remember he had a We Buy Any House type business. And he said that he was spending about £80,000 a month on like Google ads and stuff. Have you ever come across that sort of thing? Is that a strategy that you?
Yeah, I mean, we obviously spend a lot of money on Google ads. That's how a lot of the cash buying companies work. So it's inbound leads. So it's PPC, as they call it, pay per click. It's inbound leads, and you have to basically start to call. You might get 100 leads in, you have 100 calls, and maybe only 4 or 5 of them become a deal. So it's a very high volume business, but it's also a very low kind of success rate that you get with a lot of these leads. So it kind of makes you have to be creative. So then we have to start to become creative on stuff where it's like, okay, it doesn't work for us to buy it and sell it, but there's still a bit of a margin in it. So can we do an overage agreement, i.e. can we agree a certain price with the vendor, find a buyer for it, maybe make a smaller fee, but ultimately we'll invoice that fee on completion, so we're not having to buy it, pay stamp duty, legals, finance costs, etc. Because that swallows a lot of the profit,
Indeed. And when we talk about profit and margins, like what? Because obviously developers, when they're doing a development, they need 20% on GDV, on cost, etc. Or buy to let investor might, if they get a cash on cash return with their equity, if they're like 7-8%, then they're quite happy because they see the long term capital growth.
Yeah.
What sort of margins do you think are looking at for as a property trader?
This episode of Property People was brought to you by Merry Oaks Property Finance. Merry Oaks Property Finance is my company. I'm the managing director and founder. We launched August of last year. We provide finance for SME property investors and developers across the UK. Everything from bridging to development finance to whatever your exit might look like. If you're going to hang on to the properties, from commercial term loans, buy-to-let, holiday lets, service accommodation, etc. We are investors, developers, landlords in the background. We have been lenders. We have been estate agents. So we very much know the value chain. We very much know what you go through, the highs and the lows, and we want to share them with you. So if you are looking to make an investment, if you are looking to refinance something, if you are looking for funding for any of your property investments, please do reach out. We'd love to hear from you.
I mean, on average, you're anywhere between sort of 15 to 25%. That's the average of the margin that you're making. You can get some really, really good results in an auction, and it's just obscure. And you're like, I've just made 100 grand on that property when I was expecting only to make 30, maybe 35. But to give you an example, in terms of our biggest deal, the deal that won us Property Traders of the Year, that was a piece of land. It was a 3.5 acre site. It was kind of just as we were kind of coming off that hangover from COVID. Someone came to us and said, look, I had this 3.5 acre site on the market for 1.2 mil. It's been on the market for 2 years, not sold. I thought it was overpriced when it was originally on. Give us an offer. And I said, look, it's a punt, no more than that. But they said, we need it sold in a month because we're now getting divorced. So we had no time for searches, no time for ground investigations. And we said, okay, fine. I said, look, I'll get a RICS on it and I'll give you 50% of the RICS. How about that? And they said, okay, fine. So we got a RICS on it at 975. We picked it up at 475. We did it in a month. We bought it. And then we basically flipped that site on for 750 in auction. Nice. So that's a good little profit margin. But, again, that site had a £8 to £9 million GDV, 5 million build-out costs, huge margin in that. But do I really want to be in a site for 3 or 4 years over multiple phases? No. So for me, I'm a trader. So a trader's leaving enough meat on the bone for the next person, not focused on making maximum profit. I'm focused on I want to be in, I want to be out, and I want to move on. So that's how traders do it.
And how do you feel about like the money that was left on the table, inverted commas, for property development or for the long-term capital growth? So many people, including myself, have made great money over the last 20 years just through that capital growth.
Yeah.
Does it ever break your heart that you think, you know what, like even looking 5-6 years ago, oh bloody hell, we traded that on. If we held it, we could have made another 10-20% on it.
Absolutely not, because I'm making my profit today. So I'm bringing forward all of that capital growth to try and force that capital growth by basically making a profit today. Now, yes, I would have made way more if I waited, but I'm turning my money over 4 or 5 times a year. That's what I want to try and do. So I think trading is so kind to you if you can do it well and you can do it right, that capital growth really is kind of not the main factor. For me, capital growth, it comes when you've traded enough, you've got enough of a cash pot, and you kind of want to just go and retire. And that's kind of when I'd look to really start to expand the portfolio again, and maybe look to, I don't know, like building up a portfolio made me lazy. That's the reality, because you kind of build up this portfolio. It's a lot of time and effort to buy it, refurbish it, refinance it, to go through all that. But once you've optimized it and it's kind of at a level, you don't have to do much. You have to asset manage the letting agents. You have to approve maintenance bills, etc. But there's not loads to do, and I felt like it made me lazy. So for me, I've still got the portfolio for capital growth if I really want to. But for me, really, I'm making capital growth on a day-to-day basis anyway. But I'm just forcing that.
Yeah, it's interesting as well because, as you say, with the property portfolio, you can probably tie up a lot of cash.
Yeah.
And it drip feeds you a little bit of money here and there. And then, great, you get the long-term capital growth. But we just had another person in previously who's got a trading business. I've got a trading business as well. And that trading business is turning over and it's cash generative, which is what you want in any good business, really, is that, the cash. What do they say? Revenue is vanity, cash, profit is sanity, and cash is reality. So the fact that you're being able to generate that cash, and it just happens to be you're trading properties rather than...
Yeah, it's any trading business, right? I mean, I think it's always good to combine a trading business with an investment business, because ultimately,
exactly.
If you're throwing off enough cash here, you can then start to use that cash and put it into your investment business, unless your trading business needs the cash, which is what our business needs, because ultimately we're buying and selling, so it's very capital intensive. But if you run a service-based business where you really don't need as much cash, maybe your overheads are covered, or if you want to take on another team member, etc., then it's a really good way to kind of combine that strategy of trading income with investment income and almost create a waterfall of trading income into your investment portfolio.
And do you, because at one point, do you have a letting agency or something?
We do, yeah.
For managing your own properties?
Correct, yeah. So as part of setting up a portfolio, I've got a business partner that basically really was passionate about setting up a letting agency. He was with me since he was at uni. And we did that. We did that together, and I supported him, but he really drove a lot of that business. And we managed probably about 600 properties up and down the country, including ours. And it's all remote management as well. So got all the systems, processes, tech in place for remote management.
And do you get excited about that at all, involved in it at all? Is it not really your bag?
Not really excited, not really involved. I only get involved in the real problematic stuff. So if they're really struggling with something, I'll get involved in it. I'll also get involved where we need to improve a system or improve something, like, for example, we just brought on recently a partner for debt collection. We were doing debt collection in-house. That was taking so much time and effort from the team, and it's quite hard work. Like, if you don't know how to handle debt collection, you find it like it's really, really tough work. So I went out and outsourced to a debt collection agency now, and that's really freed up the team's time so they can focus on other things. And it's actually improved the amount of debt we've actually been able to recover as well. So we've seen real tangible results. But that's the type of person I am. I'll go out, I'll establish a relationship, I'll forge that relationship, and then kind of hand it over and say, right, this is what we're going to be doing. So yeah, it's just that's kind of my involvement in that business.
Yeah, I mean, debt collection is definitely not something I'd like to get involved in at all. It's not my bag. But when you're managing 600 properties, inevitably you're going to have some people that don't pay rent or those sorts of things, and you're going to have to step in at some point.
And I think the majority of that is probably my own properties that I've bought tenanted at discounted rates and just handed it over to the guys. And I'm like, guys, yeah, we just bought this as tenanted, and we kind of, that we call those kind of tenants. So our tenants are grade A's, B's, and C's. And grade A is someone that we've put in from day one with a guarantor, a homeowner guarantor ideally, a deposit, proper referencing. A grade B and a grade C is someone that we've inherited. So inherited tenant. Grade B is an inherited tenant that doesn't have all of those things, maybe, but actually is a very good quality tenant, pays their rent on time, allows us to do inspections, keeps the property really nice. And then a grade C is they're an inherited tenant, but they're not paying their rent, or there's something that's basically creating a problem, in which case, if you're in the grade C category, we're basically asset managing them out of the property. So it's working with them to try and figure out how's the best way to get them a new property. Do we have to contribute towards a deposit, towards their new property, whatever it is? Because, it's tough to find properties these days, especially if people are used to low rent. Because we buy a lot of properties from like old school landlords, etc., that haven't really put any rents up, and people are like, I've been paying £350 for the last 20 years, and it's like, yeah, but the real market rent is £800, £900. So, they won't find anything. They have to, genuinely, they have to get a notice from the bailiff or from a court to take it to the council and get a council house. So,
what about like protected tenancies or
regs, basically?
so like sitting tenants and stuff?
Yeah.
Would you ever take on a property like
Yeah,
that?
we've bought plenty of that kind of stuff.
Really?
But we'll buy that and we'll trade it as well. Like, there's tradable value in everything, right? So, I know I know someone that runs another cash buying company, and he bought a property at 50% of its value. I think he paid 220 for it at the time. No income. There's no rental income on it. The tenant lived in it for 9 years without paying a single bit of rent.
Oh,
That was the whole regulation.
That was the agreement.
That was the agreement. So the agreement was they'll live in there without paying any rent
Free.
until they die. So what you do is you underwrite the tenant. Do they smoke? Who do they live with? It's you actually are trying to figure out how long is that tenant going to survive for.
Yeah, sure.
And then he sold it for just over 500,000. After 9 years, once the tenant passed away and he got vacant possession.
Got you.
But that's like what Granger do, Mountview do, all these big asset management companies and big funds. That's what they do. They bought a lot of regs. Yeah, once the tenants have passed away, they'll basically then go on and sell.
You gotta have deep pockets to do that kind of thing, because these lasted 18 years.
Yeah, exactly. I mean, ultimately, this is it's a risk reward you got to underwrite. Yeah, it's like anything really. It's like insurance. You got to underwrite that risk.
What's the as a property trader? What's the biggest risk?
The biggest risk is not doing enough deals. That's the biggest risk, because if you do one deal, that deal can either make you money or lose your money, and that's either 100% success rate or 100% failure rate. Whereas if you're doing 10 deals and 1 or 2 loses your money, you've still got an 80% success rate. So the biggest risk is not doing enough deals and not having enough, a big enough pipeline. And the third thing is becoming a motivated buyer. If you become a motivated buyer and you start competing with other people, whether they're investors, retail buyers, developers, that's a very, very risky thing to do as a trader. Because as a trader, you got to know where your limit is, and you got to say, this is my limit. Do not go above that limit.
Got to be disciplined with that.
Got to be very disciplined, but at the same time, you've got to really cut your losses and just run your winners, cut your losses. So if you're like, probably bought the wrong property, didn't really do as well, don't just keep trying to sell it. Just that's mind space, and that's capital that could use for a better quality deal. So if you're getting enough deal flow, get rid of that property, take the loss on it if you have to take a loss, and move on.
I do think that you've got to have like very, very sharp, quick thinking
100%.
Ability to make these kind of decisions, because especially if you're operating at volume. And I mean, how many inquiries? How many deals are you analysing in a month or a week?
400 to 500. We end up buying probably about 5 of them a month. Realistically, we're buying about 5 of them. Sometimes, I will get people WhatsApp me or call me directly. But we've got a process for it. I've got someone that basically underwrites and analyses everything, comes to me and says, this is where we'll be at, or goes to whoever it is that's basically on the end of the phone, basically with the clients and the customers. But I do sometimes have people that WhatsApp me and say, what do you think of this? Or a phone call, what do you think of this? And sometimes I think
I've sent you something before with a portfolio, yeah.
But that was a big portfolio, but that's quite risky. That needs a proper analysis, etc. But I've had stuff where someone's called me up and said, I've got this, I can get it for this price. And I said, yeah, I'll do the deal. That's it. I didn't do any analysis, whatever, because that's gut instinct. I might have sold something in that area. I might know that area well. Or I just think, do you know what? I think that property's worth 150 grand, and if you're giving it to me at 90, I'll do that deal all day long, regardless. I probably won't even see it. Half the deals I do, I don't see inside the houses.
Because the labor-intensive work that needs to go into going visiting them. But then isn't that a massive risk as well? It's like sight unseen. You've got what happens if there's a big crackdown? Do you get a surveyor or like?
No, look, we in our traditional model of the cash buying world, we will get a survey around and all the rest of it. But there's sometimes where someone will come to me and say, I can't get access, no internals, I need you to complete next week. All we do is we underwrite the risk, right? So if we normally offer 75%, 80%, whatever it is, we're then offering 50 to 60%, for example. Right. So it's all about risk reward. Everything's about risk, and people don't really understand that. It's like, if I buy that at 50% of its value, that's selling at 60 to 70% of its value at auction. Doesn't matter what's going on inside. And you might have 1 in 20 that's really, really bad. It will still sell and break even. So we just underwrite risk. That's what we are. We're almost like insurance company.
Absolutely. And well, it does. I started to think more and more down that route. And then so now, rather than buying through auction, you're selling more than you buy through auction. Is that fair to say?
Yeah. I mean, look, there's something that I call, and I phrase this word, kind of auction arbitrage. So I bought stuff from one auction, did nothing to it, and sold it through another auction the next month and made profit. And that's actually a thing, believe it or not. A lot of traders do that all the time. I bought a 3-bed semi in Croydon. I paid $280 for it. Sold it in auction at 329.5, so we made good profit on it. Someone exchanged contracts with me and put it into Savills 2 weeks later and sold it for 364.
Oh my day!
So they made 34 grand off of me, but buying it from an auction and selling it to another auction, and I was trading it. So it was almost like 3 different trades in one go.
And you think, well, you get away with it once, but it's actually been traded 3 times.
But that's the thing. So I think it's one of these things. If you've got appetite for risk and you know how to underwrite risk and you can kind of have this volume, then you're going to be okay. But it's very much a case of if you've just got one deal, you're going to be so precious about it. I want to maximize it. I want to develop it out. I want to do this. So we're never ever precious about a deal. Just another deal. It's just another number for us.
I think because you come from that place of abundance and you've got that pipeline, you think, okay, it's kind of like actually if you go to the casino and you play roulette on the outside, basically, if you just keep on doubling up on a red or black, eventually you can always make the money back because you just keep on putting more. So if you come from a place, they don't let you do that, obviously, they'll kick you out if you try. But it's a kind of a similar mindset is that we know that we're going to make good. We know that we're winning more than we're losing. We just got to make sure that we don't bury our head in the sand and get scared about making the next trade.
Correct. And also, not getting complacent and going out and spending all this money that you're making because ultimately the business needs the money, So
that's your biggest resource.
100%. You need capital because ultimately if someone comes to you and says, I want to sell this and it's a great deal and you don't have the capital for it, that's a problem. So we've always got to have a certain amount of capital at any one time to keep everything moving.
And is there a limit to kind of like, okay, if we give you 10, because there's only so many deals that will transact at that level in the marketplace. So you kind of like, it's no point in really holding on it, double the amount of cash.
No, but that's what I mean. So the quicker we are in and out, it means the quicker we get the money back and we can buy more deals. So I'm not looking at trying to put everything into a position where we can try and make loads and loads from it and take our time. It's like I want to be in and out because our money needs to be cycled. But if we ever get to a position where we don't have money and we get deals, I've got a really good network of other traders where I'll go to them, they'll pay me a big fee or they'll cut me on a net profit basis if I wanted to. So I never ever say no to a deal. Regardless of what's going on in the business, we can always either place that deal or buy it ourselves.
And you mentioned the importance of abundance, and that was probably the biggest risk if the people just doing, having that scarcity mindset, not doing enough deals. In terms of getting the numbers wrong, so that deal that was £100,000 at the end, but we have to buy it at 50,000. We ended up buying it at 75, 80,000, which was, and it traded in the auction for 60.
Yeah.
Why is it, and how is it that other traders potentially make those mistakes? Because how busy is the marketplace? How much competition do you have?
A lot. It's a very, very busy marketplace. So ultimately, traders are competitive as well. So I know some traders that just for the sake of competition will pay more than anyone else. They don't want another trader to buy it, so they'll pay more, and they might do huge volume, but they might have a huge cash part, and they're not using any form of finance whatsoever. So they've cut their finance costs down, so they can afford to pay more. So I don't always look at what other traders are paying for stuff. I look at what we can pay for stuff based on how much things are going to cost us, etc. But look, if we have to take a loss, we'll take a loss on it at the end of the day. We very rarely make a loss, but we will, we've made a loss a few times, but it's very rare compared to, as a percentage of the amount of properties we bought and sold.
And what about the role of technology in making those quick decisions? Does that
Yeah, so we use different bits of software. So part of the underwriting analysis is we use software, we get desktop valuation, etc. done on stuff. So we've got a whole process for that. But I guess you can see that's our USP because people are always asking us, how do you do this? And it's like, yeah, but that's the whole point is, we can act really, really quickly, and that gives us a bit of a difference. And there's some people that honestly, there's some people that don't have any process for that, and they just, it's that trader that makes those decisions. So the whole business is dependent on that trader.
So I think it probably sounds like the old-fashioned way, where technology wasn't even a thing, even if they wanted
Yeah,
to be.
but they're experienced enough that they've bought, thousands. Not I've bought hundreds of properties. There's traders that bought thousands of properties. They know exactly, every single thing. Whether you go to them about property in Newcastle or down in Brighton, they'll know about it. So,
what's your favorite way of buying properties? Is it through an auction, or is it going directly through to a vendor through a Google ad or something?
I like the direct to vendor approach because ultimately, when you think about it, property is a very illiquid asset in the UK. Yeah. So it takes a long time to sell a property. It takes a long time to buy a property.
Yeah, absolutely.
And if you genuinely need the cash for any reason, whether you need it for your business or personal life, whatever it is, you can be going through something that's creating that, requirement for the cash. You can't go to an estate agent because they're going to take 6 to 9 months. There's a third fall through rate, etc. Even going to an auction house, arguably, there's no guarantee that it's going to sell. You need a 4-week marketing period, then it might sell, it might not sell. What happens if it doesn't sell? You have to reduce the price. So there's a requirement for people like us in the market where they can go and just get a genuine cash deal done, don't have to worry about things, but ultimately they need the margin. So it could be that someone's inherited a property. They've not bought it for X and they need to sell it for Y. It's like they've inherited it. So for them, taking a haircut of 20, 25%, not the end of the world, because they need their money today for their children's school fees or whatever. Or it's someone that's bought the property a long time ago and just has a large amount of equity in it. It could be anything, but we very much struggle with people that, for example, want to upsize. So if someone comes to us and they're like, we want to upsize, we're like, look, you're going to basically need more money here. So why are you selling it to us? Because, downsizes, we do loads of that stuff because it makes sense. Going from a 3-bed house to a 1-bed flat or a 2-bed flat, whatever it is,
and you've only got so much time. You're in the elderly kind of phase of your life. You don't want to sit around on the market for 6 months.
Exactly. So, there's certain situations where we know that people won't have the equity to give away. So we kind of just tell them from the beginning, look, these are the 3 paths. I think you need to go to a local agent to try and maximize the amount you're going to get from this, et cetera, et cetera. And it might be that they'll come to us and say, I don't have that, luxury of going through a local agent because of time or whatever it is, or certainty. But generally, we try and be as honest as possible with people from the beginning and say, this service isn't for you. This service is for a certain amount of people, but we'll tell you very quickly it's not, because we're going to waste resource if we lead you down one way and you're like, this is not for me.
Some people might call you up. I imagine you probably do get a few inquiries like 2 weeks, that's great, and then they want a full price for it. It's like, well, it's not quite how it works.
We get loads of, and we always come back to, look, what's more important? We always focus on motivation. When we get a phone call, the first thing we ask is, why are you selling? Because ultimately, if we know why they're selling, we'll know which way to kind of direct the conversation.
Just doing a price check, is that?
We get a lot. So we got like, I'm just looking for, I just want a valuation, or I've just inherited a property, whatever it is, and we kind of prioritize things accordingly. But the people that have just inherited a property, they're like our biggest priority. That's like, because ultimately it's money they've never had, and from their perspective, they've been maybe waiting a year or 2 years for probate, and they've already spent that money in their head. So when probate gets granted, they're like, I need the money really quickly. So that's our main focus.
What's the craziest story you've heard from somebody looking to sell?
2021, I had a vendor that called up and said, I want to sell this property. It was down in Plymouth, I think it was time. It was a 1-bed flat. I took the phone call at the time. I still get involved in certain phone calls. And he said, I said, what are you looking to sell? He said, crypto market's going crazy. I said, right. So I said, you're selling to, he's like, yeah, I want to sell this property really quickly because I want to get my money into crypto straight away. And that's a crazy story, but that happens. And then 2023 was, I'm struggling with my bills. So you can kind of, we're at the cold face. So we see motivation right at the start before estate agents see it, before it gets on the media, before anything, because we can see the motivation levels. And, 2023 was a tough time for a lot of people. We saw lots of people really struggling with bills, with lots of different things. So, they didn't want to, they really need to sell. 2024, we're seeing that motivation kind of just slightly start to drop off. And it's like, I'm going to wait, or I'm going to go with an open market agent or whatever it is. I think the market is back. I really do. I don't think it's going to go crazy like it did in 2021 and 2022, but I think we're going to have slow and steady growth from here on out.
Yeah, so I've been saying for quite some time now, survive till 25, where interest rates start. And I mean, the swap rates have gone up a little bit, but you always get that little fluctuation when you're on the way up or on the way down. But it does seem like by the end of this year, coming into next year, we should have at least, barring any black swan events, at least a kind of a year or two of a reasonable runway of like good times. So in that time, you must be thinking, okay, it's going to be really difficult to buy stuff. How are you preparing yourself for that, for those up and coming years?
I mean, look, we take an opportunity when we get it, right? So we find times of holidays, so like Easter holidays, Christmas holidays. People need to sell, and there's not loads of buys around in those periods. And actually, you find like auctions are quite flat, and open market is quite flat. So we try and capitalize on those times. So December is a big time for us where we buy a lot of property, and then we arbitrage from December to, we know January, February is going to be really, really busy. So we try and buy as much as we can in a short period of time. We're not like sat there kind of thinking, oh, we don't really want to over leverage in terms of how much property we're buying in a period of time. You know, you make hay while the sun shines. So if there is loads of motivation at a certain point, because there isn't loads of buyers, we'll buy loads of stock in. And it might mean that next month or month after, we're kind of not buying as much, but we've got loads of stock, so we can start to sell it. So yeah, we always try and build the pipeline up when we feel that there's more motivation.
And geographically, is there any places in the country that you love going? And inversely, is there any places that you like absolutely no way?
Yeah, I mean, we don't buy in Scotland. We don't really buy in Wales. We buy in England mainly. I mean, I wouldn't be adverse to looking at Wales. We had one in Wales that was a pretty good deal, and we ended up placing it with a trader just 2 weeks ago. Not a massive fan of the Northeast, I'm not going to lie.
I grew up in Durham. Why?
Yeah, I mean, look, you do get loads of really good areas. You know, you've got places like Durham, for example. My wife was living there for a while. You've got places like Gateshead, Newcastle, but it's also very trappy areres. And
there are some little coal mining pit villages.
Yeah, you've got some really, really trappy areas around there, and things are cheap for a reason. But for me, I feel like that's a place where people can get really caught out, and it just doesn't. You don't get as much excitement as you do from investors in the Northwest, for example, around Manchester, Greater Manchester. Right. So where I find the Northeast is probably a great place from an investment point of view because you're not having as much competition. But the Northwest, from a trading point of view, is just so much better because auctions go crazy over there. People will overpay for stuff over there. West Midlands is pretty good. East Midlands is pretty good. I get some bits in the south, so, you know, Brighton, Hastings, Southwest. Really outskirts of London, never done anything in London itself. Although I think we just bought a one-bed flat in New Malden, so that's going to auction next week, which is interesting.
So with the Northwest stuff, and we're saying kind of around, in and around Manchester, do we go out to like the towns like Bolton and Blackburn?
Yeah, basically Greater Manchester. That's right. Yeah. I'm not really buying stuff in like big cities.
And
also,
sounds like it. Yeah.
You struggle to get good discount in big cities like Nottingham and Sheffield and Manchester. You won't get a good discount. Whereas your peripheries, like your secondary, tertiary locations around them, that's where the real discount is.
And some of these properties, and they come in all different shapes, colours, sizes in terms of condition.
Yeah.
Some of them can be run down, some of them can be tenanted.
Fire damage, tenanted, really good condition. We get all sorts of stuff.
And you're completely agnostic when it comes to that. It's quite,
but we figure out where we're going to place it. If something's like an ex new build, obviously we're going to have to factor in the risk of the new build premium and all the rest of it taken off. But we're probably going to have to go open market with that because that doesn't really go auction market. If something's fire damage, we go auction with it. You know, you've got to just figure out.
So the RICS valuation, how important is that to you? Do you do it on all the obviously not on all the properties?
We get it on about 75%.
75%.
Properties, yeah, we get a RICS. And that RICS is what leads us because it's a third-party RICS. It's arm's length. So, you know, if it is a case of we've agreed at probably a bit too much money for whatever reason, we'll go back to the vendor and we'll explain that. And we'll give them the report and we'll say, look, I appreciate we've agreed at this, but the reality is we've got the RICS and this is what the RICS is saying. And from our point of view, we're paying a lot of money for these RICS surveys. So we don't mind sharing it with the vendors because we want to be open with it. It's not like, the RICS is coming in at 200. Actually, the RICS was at 250 or whatever. No. Yeah. And they understand because they're like, it's a third party, it's not you guys actually in-house or whatever doing it.
Yeah.
But as I said, where we're not doing RICS is where we're getting stuff at the right money that it kind of makes sense, even without a RICS, that we'll take that risk on.
What's the biggest myth when it comes to cash buying companies? I mean, for example, one of the things that I know that when I came back into the market in 2015 was I thought it was a great idea, like, you know, cash buying companies, we buy any house. And then there was somebody who was telling me, no, you don't want to get into that business. They're all just vultures.
Yeah. I mean, look, it's majority of cash, everyone that thinks every single cash buying business actually buys properties is wrong. There's some cash buying businesses that don't buy the property. They just then pass it on to an investor database or other traders, whatever it is. I think that's the biggest thing, is knowing which companies are actually actively buying properties and which ones are just the face of it that basically then distribute it to sources or investors or whatever it is. So that's really, really important. There's some cash buying companies that are just like getting anything really, unscrupulous. They're promising this and not delivering and all the rest of it. And that's where Google Ads comes in. That's where Google reviews come in. That's where regulation comes in. So we're regulated by the Property Ombudsman, for example. We're also regulated by the National Association of Property Buyers. So we've got two bodies that regulate us. So if you're dealing with someone that's not regulated, doesn't have really good Google reviews, probably tells you a lot about them as a company.
Yeah, and at the end of the day, so I mean, I thought it was a great business idea, and then they gave me that, so I thought I'm going to look into it because I don't want to take somebody else's word for it. And it's exactly that. That's pretty much what I found, is that yes, within any estate agents, I used to be one, got a very bad rep as well.
Yeah.
And some of them are terrible estate agents. I can safely say that. I've come across them. I'd like to think I was one of the better ones. And then the Google reviews and the testimonials that you get.
With estate agents, I mean, they're always over-promise and under-deliver to get business, right? That's what they do. Your house is worth 150. Oh, no, we can sell it 190 all day long. You sign up with them, they reduce the price, et cetera, et cetera. But all they're trying to do is win the business over.
Tie you into a contract for 12 weeks.
Yeah, it's that hook to get you in, really, isn't it? And it happens that's what I mean. It happens in every industry. Does that mean that estate agents are bad? No, it doesn't. It just means that there's certain estate agents that are basically not doing the right job role, but ultimately, come back to bite them, whether it's bad Google reviews, whether they'll deconstruct them, whatever it is.
I mean, I've worked in that industry for a number of years, and in fact, what would usually happen is you'd stand in front of the seller and you'd kind of gauge, do they really want to try the top money and go for it? Is that what they're wanting to hear? Or do they need to sell fairly quickly? Okay, they're not distressed, but they do have a school that they need to start in September in that particular area, and they need to move on, and it's January now, so the window. So I probably need to give them a fairly realistic valuation. So there is a kind of a gauge to determine where you're going to go in as an estate agent. Do you do a similar thing with your sellers?
Yeah, kind of like we'd want to know where their motivation levels are. If they're like, I want to sell yesterday, and they've got really high motivation levels, we're going to say to them, okay, fine. If you want us to bypass a lot of our process, we're going to come down on our price. If you want us to kind of follow our process, and maybe it's 4 weeks or whatever it is, then we can follow our So everything, if they're like, look, I need to sell quickly, but I just want the certainty, and I want you to exchange, but I can complete in 3 or 4 months, they'll probably get a bit more for it. So I think everything just depends on time frame, the property itself, is it mortgageable, etc., all of this stuff.
Yeah, and at the end of the day, you're providing a service. People want and need to do this thing. They need to release that cash for one reason or another. They're adults, so we're not going to kind of like protect everybody and say, no, you can't be selling your stuff cheap. People sell watches and cars and all sorts of stuff cheap from time to time. That's what pawnbrokers are for. Yeah. They're providing a service, and as long as you do it transparently, honestly, and you are following a process and you are regulated, I can't see the big issue.
People don't love coming to us. They come to us because they have to. That's what I say to people is we are genuinely offering a service that people need, and people are not coming to us because they're going to have fun. People are coming to us because they're going to need their money quickly.
Now, how does it feel to be an award winner? Because I was at the Property Investor Awards. Yeah. I'm now a judge of that Property Investor Awards.
Congratulations.
Thank you very much. And I was there when I saw your reaction. And you jumped on the chair out of enthusiasm and energy. What that recognition, why does it mean so much to you?
I think just because we go through like being an entrepreneur and doing all of this, that, and the other, and actually not putting our head above the parapet to actually see what's going on and what we're doing and look back at what we're doing. We don't praise ourselves. That's just how we are. We're always hard on ourselves. So I think it was good to kind of just finally get some kind of recognition from the wider industry, from multiple people, not just from one person.
Yeah.
Because if you want recognition, you probably go to your parents or your family or someone like that, and they'll pat you on the back and say, well done. But if you kind of really want to know that you're doing something really well, it's like being a broker or being an estate agent. There's specific awards in that arena. So that for me was really good to know that we won that award, specifically something within our category and criteria. It was just great. It was a great feeling. So yeah, it was a genuine reaction.
Absolutely, it did feel very natural, and I think everybody was over the moon for you as well, because you could see that it meant a lot to you. And for everybody, I think a lot of the people that I'm privileged to be able to sit with, they're achieving some really cool stuff. They're working super hard to achieve that stuff. And then when you finally get a little bit of recognition for it, it just
amazing.
feels like, it's a nice pat on the back. Outside of what your parents might give you, which is win, lose or draw, they're always championing you. So no, that was great to see. Honestly, I really enjoyed seeing that. So with property trading and property investment and development, would you ever consider kind of diversifying into development and stuff, or is that kind of like just not something that interests you at all?
We did development, we did ground up development, we did all this, that, and the other. But the problem with development is if you're in the ground for 12 to 24 months, and you can see a tsunami coming. A tsunami could be from Liz Truss, or it could be from COVID or whoever. You can't do anything. You're not going to get out of the way. You're almost looking at it coming face on, but you can't do anything but finish that development and then have to put it on the market. As a trader, if I can see that coming, or if something happens like a black swan, I can just cut my losses and get out my deals and get back in once the markets have settled down.
A lot more agile, basically.
Yeah, way more agile, and less capital intensive. Funny enough, because a lot of this development stuff, it takes a lot of capital away from you. So you're constantly raising money, taking so much risk. So I just feel the risk reward on development doesn't work. And look, if you can make enough money on it from a development perspective, you should be able to make enough money on it from a trading perspective in the first place. So like the kind of trade that we did on that 3.5 acre site, we made enough money from it that we could have traded on without having to actually develop it out and make all that money from it.
Exactly. And now somebody told me, is it a true or false question? Is it true that you don't have to pay stamp duty because you're a trader and the 3% surcharge?
No, look, there's exemptions, right? As a trader, there's a lot of exemptions, and I've spoken to tax consultants, solicitors. They don't get it. They don't understand it. I have to tell them, look, it's on me, my responsibility. This is what we're doing. So, for example, if you're a trader and you're buying a part exchange, so someone's buying a new build and they're selling you their second-hand stock, you don't pay any stamp duty on that. You're exempt if you go and trade it. If you're buying a property that's basically had a chain fall through, and you're basically rescuing the chain, you don't pay stamp duty. There's a whole host of reasons why you don't necessarily have to pay stamp duty from an exemption point of view, but you have to be a trader. You have to be set up as a property trading company. You have to be a trader. And that means you can't just say, I'm going to hold it for a bit. It's like, no, you've got to be buying it and selling it.
Right. That was a good quick fire round of true or false.
Yeah.
Now, in terms of social housing, you mentioned that you've been doing stuff back in 2019. Now there's a huge wave of, but it's kind of the buzzword right now.
Supported. I mean, people call it social housing. It's really supported living.
And what's the difference between, like, what is the supported living?
So social housing is where you have things like part ownership, or shared ownership as they call it. So when a developer's building out a certain development site, and then part of that development has to be affordable, that's part of social. So that's what they call social. That's where they'll do it into a shared ownership, and then basically that then becomes affordable. And they might partner up with a housing association, whatever, on that. Supported is basically where someone would, a company like a CIC or a housing association would lease out your property, offer you a lease on that property. They will normally sort of do management of the day-to-day, put their own tenants in there, et cetera, et cetera. And that could be in the form of asylum, it could be in the form of abused women, it could be a form of people kind of like ex-offenders, et cetera, homelessness, all sorts of stuff. But the word support comes in from a point of view of they have a level of support. So you've got low-level needs, maybe 1 to 2 hours a week. You've got high-level needs where it's like 2 full-time staff members every single day. And the reason why now it's becoming more of a craze is people realizing that, HMOs are a ball ache, for example. Managing properties are a ball ache.
Really
so
are.
It's like, how do you create that income that you thought on paper was your return on capital employed and your income, but not have to deal with all of the day-to-day crap that comes with HMOs and stuff? And that's where supported living comes in, because they are effectively an operations business. They're operating that business out of that property, and they're making their margin, and they're just paying you, a certain amount of money. It's like when you have a commercial property. Someone is using that property to sell fried chicken and chips or whatever it is, and they're making enough money from that they can pay you an amount of money, which is your rent, but they make their own operational margin on that business. Same thing, it's a commercial lease, and it's basically, it's a business for them.
And with the trading side of things, I mean, again, you remain agnostic whether you're looking at a privately owned property or...
Yeah, I mean, so this is where you can kind of start to look at reducing risk as well. So when we get a property through and we're looking to trade it, we might run it through for a postcode check with one of the support living providers. And if they come back and say, yes, accepted, we'll pay you £20,000 a year as a 5-bed HMO, but it's currently a 3-bed house that's run down, we can put that angle from an auction or from an off-market perspective to people where they might be looking for something like that, where it's already been approved, it's got a lease that they're going to have if they develop it out. And we might say, look, if you develop this out from a 3 to a 5-bed HMO, you're going to get £20,000 a year. And they might pay us more than what we would trade it on just as a normal 3-bed house.
Very, very interesting. The team that you've built as well, which we touched on just before we started, and I think you mentioned to me last, you're quite comfortable and, well, you've grown to be comfortable and you've worked out a way, built systems, process to have a team that's not 100% in the UK.
Yeah.
Can you talk a little bit about that? Because I think that's quite fascinating for a lot of people. The more and more people, business owners I meet, they're all looking for VAs. They're all looking for work that that can be done that's more cost effective than looking locally.
Yeah, so look, first of all, we don't call them VAs because I feel like VAs undermines the people that we've got. So VAs are virtual assistants, right? We've got no virtual assistants. They're all virtual team members. So a team member has a role and responsibility, right? So they come in every single day. Someone's responsible for rent control sheet. Someone's responsible for maintenance. Someone's responsible for utility bills. Someone's responsible for acquisitions and sales, for example. So everyone has a role and responsibility, and everyone kind of stays within their lane. And ultimately, that means we don't have to spoon feed people and hold people's hand. And there's probably out of 4 different team members that we'll basically interview, 3 don't want that. 3 just want I want a task, and then I'll come back to get more tasks. So ad hoc tasks. That's what VA is, virtual assistant. We're like, no, you have a role and responsibility. It's stressful because you are responsible for this whole department. It's your responsibility. If things go wrong, whatever. And that sense of responsibility makes people either step up or step down really, really quickly. So, we built up a good team. It has been a case of we've had to get rid of a lot of people because it's just not for them. But that's the whole point. You have a probation period. So hiring virtually, doesn't matter whether, we've got team members in India, in the Philippines, in South Africa, wherever they are. It's all about trying to follow a normal process that you would hire in the UK. So you want to make sure their ethics matches your ethics. You want to make sure their kind of work ethic matches the company. So you want them to be driven, motivated, working long hours. The beauty of what we've put together is, we've got a kind of group of people that like to work with each other. We have regular meetings with them. On a Friday, we'll have like a let your hair down type meeting for an hour where everyone gets on a call, talks about all the crap that they have to deal with for the week, and kind of, people like that kind of unwinding, even though it's virtual. But at the same time, we went out to the Philippines in December 2023, and we took them all out. We rented a yacht for a whole day, and they really, really enjoyed that. And then we rented a 5-star hotel for a couple of nights, whatever. And we just did lots of team building. I did some sales training as well. So I think building a culture where people want to be working for you and in your business with the team is more important than just how much you're paying them. Obviously, making sure people can live off a certain amount of money is important. And we've implemented little things like guaranteed salary increases year on year, with subject to a minimum amount.
Target-driven and stuff, incentivized kind of. I do find it interesting myself in particular as well, because right now we live in a hybrid economy as well, where everybody wants to work from home a little bit, and actually there's some people that love work in the office, but some people really loathe it, and then they kind of say, well, they give you a token, I'll come 2 days. And what's happening more and more and more is you'll have an office company based in London, but they'll be hiring people from Newcastle and Manchester and everywhere in between. And so what's the difference by going a little bit further afield? You've still got to have the same cultures. You've got to still have the same systems and processes, accountability, to make sure that you're as productive as possible. And it's just amazing that you've been able to do that in your business.
Yeah, I mean, look, my first team member I had was a virtual assistant in the UK. That's what she was. She was a VA for multiple kind of.
I've got
directors.
one of those as well, yeah.
And I think that the problem was the fact that she wasn't a virtual team member. She was a virtual assistant. Then I took on my first virtual assistant from the Philippines, and it was hard work. It's every time you have to give more tasks and more tasks and more tasks. So when we started to change it from virtual assistants to virtual team members, that was the big game changer for us. And that's what I'm saying. We've got nearly 20 members of our team now, and everyone has a role and responsibility, and everyone knows what they do. So no one has to come in every single day and say, what am I doing today? Everyone comes in and they just get started from day one, from the first minute, that they're in the business. They know exactly what they're doing, and sometimes they have to work over the weekend because they've not been able to finish something off. that comes from a sense of responsibility.
And you get to go and have a nice time in the Philippines once a year?
Well, I'm hoping to do it once a year. That was the first time, but yeah, maybe once a year, once every other year.
It's beautiful places over
you know,
there.
it's it's nice, and they love that. They love the fact that we went all the way out to kind of meet them and see them and stuff like that, and that really brought the team together.
Yeah.
Like the productivity went through the roof after that trip. It was unbelievable.
imagine.
Everyone was
Everyone's
energized. We specifically did it on just after the new year as well, so we kind of did it in like just around about sort of January 2024. So it was like that new year, everyone got started and everyone was just really in a good place. So yeah, if you did it just before Christmas, I think it would be the wrong time then, because it's kind of like it'll go dead.
Switch off, yeah, exactly. Incredible story, especially, I mean, I had no idea that you were a pharmacist. Just going on this kind of journey literally around the world. What's the best bit of advice that someone's given you?
I've had a lot of really good advice. Everything's for sale at the right price, you know? Like, everyone always thinks that I need to keep everything forever, and it's like, no, everything is for sale if you get the right money. I guarantee you, anything that you've ever said I'm never going to sell, it could be your family home that's your absolute dream home, it could be your most favorite car. If someone gave you enough money, you'll sell it, and that's the whole point, is all you need is the right money to sell something. So just from that, it kind of gives you that trader mentality of, if you get the right money, you should sell stuff.
What's the worst bit of advice somebody's given you?
Keep everything. Sell nothing. That's probably the worst bit of advice.
Very good. You're obviously successful. You're an award winner. I was there when that happened, and you are making some great waves in the property industry, which is fantastic to see. To be a successful property person, what sort of characteristics and traits do you think a person needs to have?
Be ready to handle problems, because my day-to-day is problem solving. I problem solve, and I have no problem rolling my sleeves up and getting involved. Yeah, sometimes it can frustrate me when the team can't handle certain problems, but then again, I'm like, the whole point is that if they escalate the problems to me, I can take that away from them. They can get on with their day-to-day, because I can't do that, and I don't want to do that, and I can handle the hard stuff. Like, I'm good at I'm good at having difficult conversations with people, and I'm good at kind of understanding how to problem solve something when things go wrong. So that's kind of the mindset that you need to go into it with, is don't go into this thinking this is going to be plain sailing. Go into this thinking problems are fine and problems are normal. If you embrace that, you'll be fine. But if you don't embrace that, you think this is going to be easy, then you're going to hate it, because it's just going to be problematic all the time.
Makes sense. Very good. If people wanted to find you, how could they reach out? Don't reach out. I'm a ninja. No, I'm joking. Look, I'm on Instagram, so Saif Derzi on Instagram, SaifDerzi. I'm on Instagram. I'm also on LinkedIn. So LinkedIn and Instagram are probably my most two favorite platforms. I also run a YouTube as well. So I run YouTube. Again, it's Saif Derzi. But I also have the Property Auction Hunters with Jay and Piotr, if you guys know them.
Yeah, of course.
Where we kind of analyse all different kind of property deals that are going through auctions, etc. So yeah, check out the Property Auction Hunters YouTube, and maybe I'll send a link for you.
Yes, all those links will be in the show notes. I've watched that Property Auction Hunters. It's brilliant. Really, really good. I even thought the first time I watched it, I was like, oh, wouldn't it be great if they went back and actually checked on what things sold for, and you're already doing that sort of stuff as well, because a lot of the time I was like, especially when I was looking at auction house, it was just so time consuming to look back and see what something went for, whilst also trying to look forward, and you guys just make it into this entertaining show, which is brilliant.
Part of what we're doing now is we're going to put that at the end of each video. So where we were doing one video for 3 or 4 different videos of properties, now we're going to put each one at the end of its video. So yeah, you'll basically be able to see what we think.
Oh, right, immediate gratification.
Correct.
Wow.
Correct, yeah. But we are going to be filming it actually before the auction, after the auction, so you can kind of get the actual live reactions, correct.
So very good. I highly recommend it. I love Jay and Piotr as well in particular. They're really, really super guys. So you're surrounding yourself with great people, doing some great stuff. I'd love to have you back on as well at some point.
Be great.
In the future, so we can see how all of this is starting to grow. I know you're trying to get to many more properties by year 7.
Yeah.
And many more awards on the way, I've no doubt.
Perfect. Thanks for having me on, Sam.